So it's probably a good time just to reiterate what our strategy here is with New Money Investor and how we are taking that longer term view to go back onto the dollar cost averaging to accumulate as much Bitcoin, Ethereum perhaps at these levels as possible. Do we want to just tell the listeners what we're trying to do here?
Yeah. So obviously at the end of the day, all this information on how money's changing is not much use to you unless you can do investments out of it. And so the approach we're taking first, with our first monthly edition, we focused on two assets. One was gold, and gold was based on an opportunistic sort of trading indicator because, if old money is dying, then gold is a possibility to form some part of the new system. And the other investment we recommend to start off with was Bitcoin. And the way we said you should invest in Bitcoin is to take that long-term approach. And acknowledging it's a volatile asset class, one way you can combat that volatility is to do dollar cost averaging, which just means buying into your full position, whatever that dollar figure is for you, doing it over time in increments. So you buy once a month, no matter what the price is, maybe over a period of 6 to 12 months or whatever your time period you decide you want to get into. And that way you sort of take away that worrying about, is it going to drop before 30K and hit 20K or I'm going to miss the boat if it goes up to 42,000. You're just buying on a regular basis a fixed dollar amount. And if Bitcoin goes down in price, well, you'll buy more Bitcoin. And if it goes up in price, well, you'll buy less. And it's a good way of averaging into a longer term position that's volatile. And I think that's the key point of the service is we think Bitcoin has a huge potential for being a very good long-term asset. And the way a lot of Bitcoiners look at it is say, well, you're sacrificing short-term certainty for more long-term certainty in the sense that, over the short term, like dollars in your pocket are very stable, but over the long term, they devalue hugely, massively. That's just the way inflation works. Whereas Bitcoin is sort of the opposite at this stage in its lifetime. Over the short term, you have to deal with all this ups and downs. But over the long term, and at least over any sort of long-term chart, and I'm talking like 2-year period, Bitcoin has gone up in value. So if that trend continues, then whatever happens to be your Bitcoin position over time, whether that's over 5 years, 6 years, 10 years, or whatever, dollar cost averaging now will help you sort of, psychologically deal with that volatility and build a decent long-term holding, which is sort of the idea behind it at this stage.
Well, I read a comment recently that, and I've mentioned this to my subscribers before as well, is that volatility is the price you pay to earn a return. If you don't want volatility, you're not going to get much in return. But if you don't want a return, then you're not going to get volatility. You're just sitting cash. But the outcome is pretty much predetermined. But if you want to get a decent return, you're going to have to put up with some volatility along the way.
This is the trick with all investments, really, is as soon as there's consensus on something, usually you've missed the boat. But consensus is where, you've wrote about this in your book, I think, consensus is where most investors feel comfortable because everyone around them is saying the same thing. But financially speaking, it's the worst place to be because once everyone agrees on something, then there's no new buyers coming in.
It's in the price.
It's in the price. And if something changes, you've got a bunch of people looking to sell and no buyers to support the price. So in a way, as long as you've done your research and you have confidence in your thesis, look for somewhere where there's no consensus or very little consensus, where everyone has a range of opinions, because over time, the truth will bear out eventually. And hopefully if you've got your thesis right, then there's a lot of new buyers to come in and sort of, give you the returns to make up for the volatility in the short term. And that goes for a lot of investing, not just Bitcoin, but shares and everything. So try and trick yourself into thinking, if everyone on, share market forums is agreeing with me, or if all my mates are saying this is the thing to do, maybe try and look at the opposite side. What is no one telling you to do? Maybe that's the place to look. Doesn't mean it's definitely going to be right. You can't just be a contrarian for the sake of it, but it's definitely a reasonable place to start your sort of investing research.
Yeah, I mean, if there's just a lack of consensus, and I think what we're seeing right now in Bitcoin is a real lack of consensus. You've got a lot of people who are adamant that it's the next big thing, and there's a lot of people who are adamant that it's going to go to zero. So that lack of consensus means whoever's going to be right is going to be right in a big way. So just on that, it's worth letting the listeners know that we have a guest coming up in the next week or two. I plan to interview him this week. We've got a 30-odd year veteran of credit markets in North America who's got a very, I guess you'd say, a non-consensus view of how to value Bitcoin and where the price could go, and some legitimate fundamental analysis as to what's behind that price target. So, something to look forward to in terms of a different viewpoint that we'll be bringing you, but also another way of looking at this longer term view that we're trying to get you guys to look at. We're not focusing on where the crypto markets are going to be next year or the year after. We're looking at this as a new financial system that's unfolding based on the slow death of the traditional financial system that will die from just excess money printing and the fact that debt deflation or debt dynamics will kill the global economy eventually, just because there's no that we're digging a hole and we can't get ourselves out of it. So that's something to look forward to. And by dollar cost averaging now, you can position yourself for 5 to 10 years by having quite a sizable position in this new monetary system that's growing up. So I think it's worth us really trying to hammer home that longer term view that we're trying to take, and just to sort of let you know that is the focus. We will be issuing sort of additional recommendations. I think the next sort of avenue that we want to go down, we want to talk about staking and how you can sort of derive some income from that. And that's sort of probably something more you can do once you build up a little bit of a holding of these more sort of Bitcoin type Ethereum coins, that sort of stuff, right?
Yeah. So yeah, from the investment point of view, I think we started off with the sort of easiest, and the sort of starting point was Bitcoin and a little bit of gold. And then we moved to stable coins, which was, relatively speaking, less risky than actually investing in cryptocurrencies like Bitcoin and Ethereum, which are more volatile. And basically trying to explain how you can generate income yields that are better than the banks. And whether or not people did any of those strategies on the stable coins, at least I think we opened up the idea of, a free market for banking is a superior, or could be a superior model over time. And it is a lot more resilient than people give it credit for. It's survived huge crashes, and the pegs of these stable coins was remarkably resilient. And there's a lot of what I call FUD, which is fear, uncertainty, and doubt. A lot of mudslinging at stable coins from a lot of sources, and a lot of these sources come from your institutions, your Berkeleys, your Harvard alumni, your crusty financial planners, and things like that, who have never taken the time to look into what stable coins are and the nuances of them. And I think in our report, we explain there's different kinds of stable coins. Some are asset backed, some are over collateralized, some are based on algorithms. They are innovative. They are on the edge of a new frontier of money. But a lot of the sort of criticism of them comes from a place that's not really, people haven't done their research. They're just trying to say, oh, they're dodgy. They're not backed by anything. You can say that about anything. You can say that about the paper gold market, for example. You can say that about banks, which hold very little capital compared to the deposits they're meant to have an issue. So you can say stuff like that, and that's fine. There are risks there. But if you actually want to give good criticism, you have to understand how they work more. So, I don't want to go down that rabbit hole today, but look, I think from an investment point of view, stable coins as part of your portfolio to generate income is an interesting place to dip your toes into. And I think that we've created a few easy ways to do that. The next place I think we'll get to is, like you said, staking, which is, it's like this concept of crypto dividends. So you can own like a share in a blockchain. You can be I won't say a share, but you can own part of a blockchain network by being a token holder of like Ethereum or a few other ones. And you accrue value from owning that, and that value is distributed to you, just like how dividends are distributed to companies through income. So it's a very similar in concept, and I think that'll be a pretty exciting thing for people to start trying as well.
Well, I guess the analogy really is putting the crypto, or putting your capital to work in the crypto universe, right? Yeah. As opposed to sort of having it in the wallet and sitting there not doing anything in inverted commas, but actually putting it into the system and letting it create value for you.
Yeah. So through staking, you're actually helping secure the network. So you're fulfilling a function. And in return for that, you get a share of newly minted crypto, which is exactly. You're performing a function and you're getting some income. So yeah, that's interesting, because compare that to something like gold, which doesn't really generate income, or even Bitcoin, which, there's ideas to help find ways of generating income from Bitcoin through lending it out and stuff. But from the protocol level, from the way it secures itself, you don't generate income from Bitcoin. It is more like gold in the sense that you're relying on the asset value. Some of these other cryptos, especially Ethereum, are looking at ways of through proof of stake, which is the consensus mechanism of creating income for holders. So that could, again, talking long term, whichever of these blockchains wins that battle, you could be holding on to an asset which appreciates in value, plus provides you a regular dividend, I'll call it for want of a better word. So these could be the assets that, of the future. These could be the equivalent of your old sort of stable dividend paying stocks that you get today. 5-10 years from now, that might be what certain cryptos are doing. So that's an interesting investment angle we're definitely going to get into.
Yep.
The other investment angle we're looking at is like actually stocks that are, attached to this ecosystem. So, miners, there's a few Bitcoin miners in North America I'm looking at the moment. There's other fintech companies that might be using some aspects of blockchain technology in their models, which is interesting as well. So there's a whole heap of investment ideas we're looking at, but we're just trying to take it slowly and methodically, and build it up. So, the two stories we're telling is the sort of dying of the old system, which is the interview you're going to do with our guest in a few weeks, which is I'm really excited about, how the old system is unsustainable, what it may look like, and then how this new system is creating new investment opportunities. So that's sort of the approach we're taking.
I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.